This week on Phil's Tax Hacks and Other Retirement Facts, we're going to take a question from a viewer or listener about separate accounts and how that works when it comes to retirement planning. Let's get into it. Welcome into Phil's Tax Hacks and Other Retirement Facts with CPA and personal financial specialist Phil Putney. Now let's get rolling with today's show. Hey everybody, welcome into the podcast. Thanks for hanging out with Phil and I as we talk investing, finance, and retirement. And Phil, in full disclosure, we have an email question that came in from somebody who wanted to talk about the couple having different accounts and how does that affect stuff. It's also me. So, because I'm in the same exact situation. We did actually get an email from somebody asking this question, but I thought about it. I thought, well, I'm just going to ask you for myself because this is exactly the same exact situation that my wife and I are in, right? So it's like, we've kind of briefly talked about that before, but how do you go about building a plan if people have kind of separate everything in their life? So, and many times we see this in second marriages or, third marriages or whatever it might be, right? Where they have their own life coming into it and everything is kind of separate. How do you kind of get into that? What are some bullet points or some things for folks that are separate to think about, right? And does it make it more complex?
Yeah. So, I mean, it absolutely makes it more complex because you're dealing with almost like two separate retirement plans.
Okay.
And we've worked with clients on both sides of this. The more common approach is that everything is in one bucket, so to speak. Yeah, you've got, your accounts, your wife's got her accounts, because individual retirement accounts, I mean, that's how they are. They're individual, and you might have joint savings or whatever, but I mean, it's.
But that's the case anyway, right? I mean, you got your 401k from work and she has theirs. You can still put all this stuff into the system, right? Into your software and still generate a plan.
Generally, when we're working with a married couple, if they've got even combined accounts like that, at the end of the day, it's like, well, here's the total spending budget, so to speak, right? Our net spendable income we need is X amount, whatever it is.
Right.
And then where the money comes from isn't as relevant. I mean, it's kind of, maybe prorated of, some from his account, her account, whatever the case is, up to them how they want to do it.
Right.
In this scenario where you have separate accounts, the first discussion and really thing that you have to get through is, okay, so how are you handling that currently? And I've seen this done many ways. Some clients say, well, one spouse pays the mortgage and the utilities and the, whatever, and then the other spouse pays the groceries and the insurance.
And the retirement,
so they each have kind of their own bucket that they're paying for.
Right.
Okay, so you can run that math out, based on their numbers to see, and that's where it almost starts to become two different plans because, so what happens with spouse A who's got the mortgage when that mortgage is paid off? Right. But spouse B, their responsibility for paying all the other expenses, well, that doesn't go away. It goes up every year because of inflation. The mortgage is level, so I mean, there's a lot of these different nuances that you have to build in. Yeah. And again, that's where, as a financial advisor, we can help run that math and show that reality of how this works.
Yeah. Cause I mean, my wife and I are in that situation where I said, okay, look, I'll pay for the house and I'll pay for all the upgrades and the work on it and things of that nature. And because I'm self-employed, and she, has a corporate job. And so I was like, you have the retirement account, so you fund that. And then, there we'll go. Right. So we'll kind of go from there. And so a lot of people do kind of find themselves in these compartmentalized or siloed kind of situations. And I think it can still be done, but it does require obviously communication, open communication, and, working with somebody to kind of help mediate, but also kind of help say, okay, well, this is how it's all going to kind of play together. So I guess the question is how do you start a retirement planning conversation when you don't manage the day-to-day things together, right? You've got to start the dialogue. And if you're not doing it at home, go see an advisor so they can help you do that. Right.
Yeah. And it's, again, that's where the advisor can help with that long-term perspective and running that math out to show each party in the couple to what this looks like long term, and maybe they're doing it one way today, but as you get into retirement, that doesn't maybe make sense. So having that more siloed, each of you paying your own, doesn't make sense.
Right.
Maybe what makes more sense now is we create this combined account, and I've seen couples that do it this way too, where everything gets paid out of this joint account, so to speak, and each of them can, quote unquote, contribute monthly to that joint account based on, the level of their assets or income or whatever the case is.
Yeah. And being, there's a unique situations all around, right? So again, in mine, being one person being self-employed is completely different than if you have a couple that's doing the same kind of separate accounts and finances, but both have jobs where they both are contributing to 401ks from their work, right? They have workplace plans. That's different when you're a small business owner, right? So all the time, there's all kinds of little nuance when it comes to that. So I guess, it brings up the interesting point is like, how do you approach budgeting in retirement, right? When one partner maybe has a pension and maybe the other one doesn't.
Yeah. And it's all part of that same, that discussion of here's at the end of the day, a couple that combines finances and a couple that doesn't, they have the same expenses, right?
Right, exactly.
So it's how do we divvy these up? But, the couple that's combined finances, it really doesn't matter. Here's the total need that they have on a monthly basis. His or her pension, each Social Security benefit, et cetera, it all comes in. And here's the net we need to take distributions from the accounts to make everything work.
Yeah.
Well, the same thing is if we're siloing or separating those finances, except for now, we get to the point of, well, what expenses are each of you claiming responsibility for? And maybe the person that has the pension, well, maybe they don't have as large of a 401k.
Right.
So their pension is covering a bigger portion of their financial responsibility. So they're not having to pull as much or maybe nothing from the 401k, or maybe they don't even have a 401k.
Well, okay.
The other one doesn't. So they're having to contribute, so to speak, out of that retirement savings, the 401k.
So let me ask you like this. So, okay, so you've got the software open. You're saying, okay, Mark, you've got, these 4 or 5 items, wife, you've got these 4 or 5 items. She doesn't like her name, so I won't say it. But you put this stuff into the funnel, right? You put the stuff in the software and you get the numbers, right? You get the total. Okay. Based on both of your assets, here's the numbers that you're going to hit to have monthly in retirement, right? You're going to be able to have this month, this much or whatever based on Social Security, blah, 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 blah. It doesn't really necessarily matter, does it, Phil, that where the account money is being pulled from if you're sharing it and paying the expenses of life, right? So I guess then people start to wonder, well, can I still have my financial independence, their financial independence, and then yet we are collectively getting stuff handled in retirement? That's still workable?
Yeah, I mean, it absolutely is workable. It's just a little bit more challenging from the planning standpoint because we are separating the two. For instance, a big challenge is in that separation type scenarios, Roth conversions.
Okay, all right.
So whose accounts are we converting? So if we're converting, let's say the husband's accounts, because maybe he doesn't have the pension, the wife does, but now the tax liability on those, well, who's going to pay that? Is it coming out of his money? I mean, it's just comes one of those challenges of, or if they both have retirement account, well, whose account are we converting first? Or are we, doing a piece of each one? I mean, it starts to make it a little bit more complex and nuanced because it's not like, hey, here's the bucket. So for a married couple that finances are combined, this is one of the discussions we often have because they're, typically they do have separate retirement accounts. In mathematically, financially, what makes the most sense is to convert the oldest spouse's retirement accounts first.
Okay.
Because they're going to hit RMD age first. So we're lowering their balance before they hit RMD age to help minimize long-term the effect of required minimum distributions.
Gotcha.
So especially if there's a bigger disparity in age. Well, if we're doing that, then how does this play out long-term, right? And then the other thing of having separate accounts is what happens if either spouse passes? And this comes into play a lot with like that second marriage or married later in life where you've already established yourself financially, is that you might be thinking, well, when I'm gone, I want what's left of my assets to go to my kids. Well, okay, what happens then to the surviving spouse?
Right.
So you have to have that discussion too.
The Tax Smart Retiree is your comprehensive guide to mastering tax efficiency for a flourishing retirement. you will find indispensable advice and actionable strategies designed to enhance tax savings, maximize Social Security benefits, protect against market volatility, and develop a customized retirement plan. To get your free ebook, click the link in the show notes of today's episode and download your copy of The Tax Smart Retiree right now.
Oh, you got to definitely lay all this stuff out. I mean, when you're talking about having it, I mean, we don't make it easy, right? Because, for us personally, I'm older, right? And I'm self-employed, and, we have completely separate everything because we got married a little bit later in life. And so it's kind of like, okay, this is all a lot more complex. And we talk about that all the time on the show, Phil. It's not, life is life. There's millions of people out there that are on second marriages that have things separate and so on and so forth. But every situation truly is a different kind of puzzle piece,
Right. Well, that to me personally is what I love about the job, because it's not every client that I work with isn't the same, right?
Most people don't work at Ford and you dump everything in there and you're good to go, right? Yeah.
I mean, everyone's got the similar components, right? Everyone saved money in retirement accounts. Everyone has Social Security. Some have pensions. There's all these similar components, but how they work together and how we're planning for it is much different for every different scenario. Yeah. Every client based on their specific scenario. So like this, a couple that has separate accounts, nothing wrong with that. Does it make it a little bit more challenging? Yeah, but I mean, it's doable. Right. To me, the key with having separate accounts is truly having that discussion up front of, well, you've been doing it this way while you're both earning income. Have you thought about what that looks like in retirement?
When you're not earning income.
Yeah. When you're not earning income. So like in your scenario, I mean, if you're being self-employed, now paying for all the house and all that kind of expense, but not contributing to retirement, well, when you retire, you need income.
Right.
So, but your wife is the one contributing, so you're now
she's got the income. So yeah. Do I have to listen to what she says? Do I get in trouble? Do I not get my allowance? Yeah. Yeah.
Well, and that's part of, a lot of times I find when working with those couples, it's because, well, he or she, they each want their own little, well, I'm spending on, and, whatever it is, and they don't want the other, not that they're hiding things, but they don't want that, to answer for every little nickel and dime that happened.
I'll sum that up for you. I'll sum that up for you. What are the two things that couples fight about? Typically it's marriage and the love life, right?
Yep.
We don't, money and the love life. We don't fight about money, right? In 20 years, we don't really argue about money because
you got a very defined strategy.
We got a very defined strategy. But so then we also make the joke that is to your point. So when we get to retirement, I've paid off the house, but she's got all the income. So do I get an allowance from her because all the income's coming in? And if I don't get my allowance, do I kick her out of the house because I've paid for the house? although she jokes and says, well, the state's on her side because it's, in every state it's at least half and half. So I can't kick her out of the house anyway. But you obviously
get a portion of the retirement account. I mean, it's
just having fun with that. But again, the communication though that's the critical point.
That is
right?
the key. Yeah. Yes. Yeah. So in that scenario, communication, both now, but then looking at that long-term plan is key to understand what does this look like in retirement now. Now that you both have you're going to have Social Security, and so is she.
Sure, I'll have Social Security, right? But won't be as much.
Are you only going to be limited on Social Security, and she's going to have Social Security and the 401k.
Right. So honey, can we go take a trip?
That's right. So is she going to pay for all the vacations then? I mean, how does that work? You paid off the house now, so you just have to pay the utilities, and she pays for everything. I mean, it's
right. Exactly.
Again, there's no right or wrong answer.
It's doable. You just have to. Yeah.
And how does it play out long term?
Yeah, it's a great illustration of why communication and working with somebody to help you on the nuances of retirement is important, because it can get sticky widget. Like there's just a lot of stuff that can go in there, and we didn't even dive into the medical aspect, right? So who's got the medical insurance and HSA and blah blah blah. And you're gonna get you're gonna get Medicare at some point, but I mean there's a lot of different nuances to it. So that's why it's like crazy important to work with a financial professional who does this stuff all the time, because they've Phil, you've probably seen a number of one-off scenarios, that. Yep. And maybe 2 or 3 or 4 offs, right? And so now you've got experience with those where you're just like, okay, I've seen something similar to this. We've talked about this before. I'll wrap it up with this. When somebody comes in and sits down for a financial review for the first time, and it's a couple comes in, they sit down, and you probably could, and most advisors I ask this question say, yes, we could actually do it. You could probably give them a recommendation after the first conversation, after the first hour, because you see a lot of the information, you get a lot of the quick data, you can probably make a pretty good snapshot of what's going to probably happen. However, you do your diligence because you're going to want to find out the uniqueness of each situation. Is that fair?
Correct. Absolutely. Yeah. And to that point, and I mentioned this in other podcasts before, is that at least the way I view my role in that relationship isn't to develop a plan that, I've, worked in the back room and come up with a plan and give it to you.
Right.
It's more of a facilitator. My role in that is to have the discussion on each one of these topics and show you pros and cons and help together between the client and myself come up with a plan that works, one that they're comfortable with, that they're bought into, because at the end of the day, if I've developed a plan and hand it to them, well, they didn't buy into that. Maybe that's not what they want.
Right.
So they're not going to do it. So I've wasted my time and their time, but I mean, if we've together had the discussions on each one of these talking points, walked through the pros and cons, and they've made a decision based on that, now we've got a plan developed together that can work from the long term. Not to say that it can't change, but at least we've had that joint discussion to start with, and to continue that planning process throughout retirement.
So there's no retirement elves in the back room working up the plan, and then just kind of tossing it out there. You don't have the little retirement sweatshop going on.
That's right.
All right, folks. Well, thanks for hanging out with us. Look, at the end of the day, right, it can work. You don't have to combine every dollar to have a solid plan, but it does take some planning, does take some strategizing, does take some help from a professional. So if you need that help, reach out to Phil. Of course, we got links in the show descriptions below. We always appreciate your time. Hopefully you enjoyed the discussion and the conversation. It's not always the X's and O's, but the X's and O's are very important. But a lot of times communication, well, not a lot of times, almost number one, almost every time is going to be communication. So get yourself onto the calendar, have a chat, not only with your loved one, but with a financial professional, all of you together, so they can kind of be that mediator. And again, if you need help, check on the links down below. And don't forget to subscribe to us on Apple or Spotify, of course, YouTube. Hit that subscribe button, thumbs up, and notification bell. And we'll see you next time here on Phil's Tax Hacks and Other Retirement Facts.
Phil? Investment advisory services offered through AFS Wealth Management. The content of this program is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. Investments and/or investment strategies involve risk, including the possible loss of principal. There is no assurance that any investment strategy will achieve its objectives.